Speaker. Michael Woodhouse.
Thank you, Mr. Speaker. I'm very pleased to take this call in support of the financial reporting bill, somewhat unusually ahead of my colleague Jonathan Young, who is the chairman of the Commerce Select Committee, to whom this bill will be referred if it's successful. And that's really a function of the fact that when we saw that this could come up before dinner as it did, and in the order of speeches, the committee itself had other business. So as Chief Whip, of course, one seeks the interest of colleagues for speaking on this bill, and I must say there was a clamouring towards the door, metaphorically, to speaking on this bill, so it fell to me to take this call. Although it has to be said, what was that? I did, yes. As a certain blogger says, the height and personality of a parking meter. Clearly he's never met me, so that's all right. Back to this important piece of legislation. In fact, it's okay that it fell to me as one of only two members of the National Party caucus who are actually chartered accountants. And in fact, that may be the only two in the House now. We've lost a few since the 49th Parliament. But it's one of those things, you know, I remember being told that one doesn't need to know Latin to be a gentleman, one just has to have forgotten it. And indeed, it's a bit like that for chartered accounting. One doesn't need to know all the financial reporting standards. One just needs to have forgotten it. No cabbage boats in financial reporting standards, I assure the House. Actually, it was 1993 was my last year at University of Otago studying accounting. And that was the year that the Financial Reporting Act that this bill replaces was actually passed. It was a big year for law because that was when the Income Tax Act was also replaced with the 1993 Act. So I was in the unusual situation of having learnt all of this stuff under one set of legislation and then having to reword it. But truth be told, actually, I wasn't a very good accountant. Loved the client contact, loved the management and cost accounting stuff, but wasn't very good on the financial reporting stuff, probably because I didn't really have the patience and, you know, that attention to detail that went in, at least in those days, with the preparation of financial reports. And of course, in those days, clients would come in, particularly the small business clients, literally with shoeboxes of bank statements and checkbooks. That's right, yeah, and they came, and away we would go beavering away coding. Now they come in, hopefully most of them, with USB sticks. Stick it in, turn the handle, and out comes a set of financial reports. But that 93 Act, I think, was the first time that we introduced the idea of an exempt company, something that was different and could therefore report differentially from generally accepted accounting principles, or GAAP. And that whole differential reporting framework came in at that time. Except many of the companies that qualified for differential reporting didn't actually use them, and there was a couple of reasons for this. One was, while the GAAP standards were adjusted, the income tax obligations weren't, and therefore it was necessary nevertheless to produce a full set of accounts just for tax purposes. And that was often a bit of a nuisance to small businesses who actually didn't care too much about GAAP or what the accounting or accrual income was. They were interested in how much money they had in the bank and how much tax they had to pay. And that's really what small businesses do. They work on cash flow, and they want to make sure that cash flow is positive. So it probably wasn't as effective as it could be. I think things have moved on now, particularly with the tax requirements, and I also note from the regulatory impact statement and the Minister's speech that there's actually a body of work that needs to go on to make tax compliance simpler for small businesses, and the effect of this bill is certainly going to be greater when that work is done. Now, I want to touch on Mr. Parker's quite extraordinary comments in his first reading speech about issuers. And I think I heard him say that companies that issue debt or equity to strangers on an arm's length basis rather than closely held companies should possibly have a time limit against which they are required to report the full set of reports in accordance with GAAP and international financial reporting standards. And I find that fascinating, quite extraordinary, in the sense that here we have this government having spent 3 years improving financial markets reporting and authorities, and particularly with the issuing of prospectuses.
That's right.
And this notion that somehow after the passage of time it would be okay to let the leash out a bit in terms of financial reporting standards. There's a couple of problems with that. Firstly, companies like Blue Chip or Lombard would fall into the category of an organisation issuing a security, in their case debt, although it was never very easy to work out whether it was debt or equity, somehow over time then having a lower financial reporting standard than they did at the start of the issuing of the security. I find that quite extraordinary. But it also doesn't account for the mobility of security and the fact that people can trade debt and equity, and therefore the recipients of the issue of debt or equity could be new to the organisation. And in order to assess the value of that security, they're going to need to rely not on the initial prospectus, but on the financial reports that are required to be produced from time to time. So, I think Mr Parker did mention the issue of a closely held company. I think the Companies Act actually does allow for that at the moment, but that is something the Select Committee could look at. I hope it doesn't get chased down a rabbit hole with this, because actually this is not the purpose of the bill. The financial reporting regime is okay for those larger organisations, those issuers. The benefit in that case clearly exceeds the cost of producing the financial reports, and I would have, and I would expect the people who buy into these securities would have little time or truck with the relaxing of the financial reporting standards. That's not what this bill is about. However, that's enough from this lapsed chartered accountant. I shall leave it to my much more informed colleagues on the Commerce Committee to comment.
Mr Speaker.
Honourable Clayton Cosgrove.
Mr Speaker, I